Good morning, everyone. It's 9 o'clock. I'm Richard Calhoun, real estate broker with Creekside Realty with 40 years of business experience right here in Silicon Valley. We're here to talk about the statistics in the last week. I've added to our heat maps the index over here and the coloring. So you can see that Atherton Menlo Park is a little bit of a blue, and then you can see it a little bit of blue over here. So it's the slowest area in Santa Clara County. At 99.6% is what the sellers are getting their asking price. So you look at the sale price to list price ratio of all the different transactions, you take the average of that, and it's just under the asking price, which would be 100%. So they're losing 0.4%. Every other micro market area is above 100%, and the deeper the red, the more above 100% they are. So you can see it right at 100. There's no color. 110% above, or 10% above 110% total is saturated red, and 96.5% is saturated blue. Moving on to the frequency of overbidding. This is how often are getting more than the asking price. And you can see that Menlo Park, Atherton is pretty deep red this time. And that's because only 30% of the sellers there are getting more than their asking price. That's still a third. That may sound like a lot, but it really isn't. And the reason I say that really isn't is even when we were in the worst recessions we've been in, about 15-20% of the sellers get more than their asking price because the property's artificially low. Someone mispriced a property, someone really wants a property, and people overbid, 20% of the time, even when the market's slow. So to be at 30% now indicates the market's really slow. On the flip side, let's go up here to Milpitas and North Valley, where we're at 80%. That means, only 8 out of 10 sellers are getting more than their asking price. That's pretty significant. It has been as high as 95% for short periods in time in like Cupertino, Sunnyvale. Looking at days of unsold inventory, this is the reddest graph of the three, and actually, frankly, the most significant in my opinion. And this basically tells you how rapidly it would take to sell all the existing listings in the different micro market areas for single family homes at the current rate of sales. And you can see these numbers, a lot of them are in the teens, and I'm saturated red at 24.5. I consider it basically for most micro market areas to be in a seller's marketplace, anything below 40. There isn't anything on this map that isn't below 40 except for Atherton Menlo Park right now, and it's at 71. So that's why it's a very faint shade of blue. It's hard to tell, but if you come out here just to the body, you can see that's a little bit bluer, and that's because it's just a little bit above 70. So from 70 to 110 is where I'm blue. From 24.5 to 50 is where I'm a shade of red. And you can see most of these are solidly red. But if you come up here to East San Jose, South San Jose, and Central San Jose, you can see it is a lighter shade than Milpitas. And you'll see that in the numbers. Milpitas is at 10.5, so it's basically at 24. And you go to East San Jose and Central San Jose and South San Jose, and it's at 27.7. So it's 3.2 days longer than my saturated red, and that's why you can pick up this little bit of difference in coloring. Moving on to the actual days of unsold inventory in each one of the 22 micro market areas, since I said that was the most significant metric. What you're looking for here is, at least what I'm looking for here, is the trend. And you go from here to where we are now on the right-hand side. Are the lines going up or down? Now, normally a line going up is good. In this case, days of unsold inventory, the lower the number is, the faster the marketplace is. And basically, without exception, these areas are going down. Now, some of the areas are going down far more rapidly than the county as a whole, but I don't see any lines going up. So basically what that's saying is every one of our micro market areas, there might be one exception, like this gold rod down here was an exception up through last week, but the vast majority of these areas are going down, which means the market's actually getting faster and faster. Now, a lot of that in this particular year, I think, is we just don't have the sellers coming on the marketplace, and we don't have the buyers leaving the marketplace like we normally do. Now we're looking at the same metric, days of unsold inventory, and we're comparing it to the 5-year median. So the 5-year median is this golden rod line here, and the actual data is the blue line. So again, we're below the gold line, the measuring the point, which would normally be bad when you're below. But again, remember, days of unsold inventory, the lower it is, the faster the marketplace is. So we are below, so we are much faster than we are normally for this time of the year. And you can see basically ever since we could start showing properties, well, maybe not ever, because I'd have to go back. This is basically March 14th here on on week number 10, and somewhere around May 1st, we could show property. So people were a little bit hesitant, but fairly rapidly, way before July 4th, probably the month of June, maybe June 1st on, we've had a faster marketplace than the 5-year median. Keep in mind, my 5-year median is 2015 through 2019. All 5 of those years were good years. Now we're looking at the 3 major components of real estate on a weekly basis, and we're comparing it to the median. So if it was right at the median, it would be right on the horizontal straight line at 100%. So what do we have? We have 3 metrics. One is the blue line. That is the total available of inventory. And basically you can see up until week 39, it was completely normal. Now, yes, you had more inventory right here. What was going on? Well, sellers were coming out in the marketplace, but the buyers were saying, oh, we're busy watching sports because the 49ers are in Super Bowl. So it wasn't until after we got past the Super Bowl did inventory become sort of normal. But ever since that, including pretty much through the pandemic, we've had normal level of inventory. So basically starting at week 39 forward, the fact that inventory has creeped up here and now is at 35% above normal cannot be overlooked. But at the same time, that's only half the equation. We have to also look at what the buyers are doing. Do the gray line first, because the gray line is related to the blue line, and the fact that the gray line is the number of new listings for the given week. So you can see when shelter in place was announced, we dropped way down in the number of new listings. Once we could start showing properties, sellers started coming back up on the marketplace. And then they said, hey, the market really isn't bad. So they came back up. And they've been normal ever since week 23. So 3 months after shelter in place was announced onward, we've been normal. So shelter in place was announced on March the 16th. 3 months later would have been June the 16th. So basically the middle of June onward, we had the normal number of new listings coming on the marketplace. Now we get up here to week like 35, and all of a sudden you've had more new listings coming on the marketplace, including this week, which is off the top of my chart, which goes all the way to 200%. I think the number is about 260%. So we had more than 2.5 times the number of new listings come on the marketplace this last week than we normally would. And I'll also take a little personal side note here and say, for the first time in my career, I've shown a property on either Thanksgiving or Christmas. And yes, there was reasons for that, which was the property came on the market on Thursday. Within hours of the time I was able to reach the potential buyer for it, all the appointments for Thursday and Saturday were gone. So we had a choice of either Friday, Christmas Day, or Sunday, and the offers were being looked at on Monday. So we agreed we'd go out Christmas. I picked one of the first appointments on Christmas Day to take. Within an hour, all Christmas was still gone, all Sunday was gone, and there's appointments even after scheduled the deadline now. So that's how hot the marketplace is. They were doing 40 meetings a day, every 15 minutes from 7 a.m. to 7 p.m. And Thursday was gone, Friday was gone, Saturday was gone, Sunday was gone, and most of Monday's gone. So you're talking about a house coming on the day before Christmas, late in the afternoon, having almost 200 appointments for it in under 24 hours, way under, probably within 12 hours of it hitting the MLS. That just gives me a gut check on how fast this marketplace is. Anyway, back to the number of new offers. This is the buyer demand. This is the other half of the equation, and that's the red line. And you can see the buyers came down right as shelter in place. They came right back, and now they've been up and they've been above normal, because normal again would be on the gold line here, and they're up above normal more than the inventory is above normal. So we have 135%. So we have 35% more inventory than we should, but we have 100% more offers than we should. And these are actually transactions that are getting accepted, which is why your days of unsold inventory is so low in that teen range. Moving on to the total number of active listings. So the gold line is where we'd expect the data to be on the 5-year median. And frankly, if you looked at this line, you basically would say there wasn't anything unusual. Yeah, a little bit of bump here for Super Bowl. The Super Bowl bump was more than the shelter in place bump. And that's because a lot of listings got canceled. And that's the only reason this wasn't higher. But now here again, starting about week 39 forward, we've had consistently more inventory than you'd expect to have. Now, granted, it's not a lot more, but it's not an insignificant number, because you do that vertically. So you go from like this data point to this data point. point. So you're at somewhere around, call it about 100 and 1,275. The same week going up, you're at about 1,675. So you have 25% more listings. So even though this doesn't look like much of a span, it's actually 25% more inventory than you would have expected to have. Doing the same concept to the number of new listings, the gold line is the standard where we were for the median for the past 5 years, being 2015 through 19. The blue is the current year. And you can see basically week 37 forward, we've been having more new listings coming on the market than we'd expect. This is the offers. Same exact thing repeatedly. This is the same line of the three, but now we're looking at them individually so you can see the vertical separation. And you can see week after week, we've just been putting on more offers than you would expect based on the gold line. And frankly, on volume, I expect volume to take up fairly significantly when Prop 19 takes effect on April the 1st, because sellers will no longer be penalized for moving up. They can move from their house, provided they're over 55, handicapped, or a disaster survivor. So, handicapped people and those over 55 can move up in value, can move down in value, and they can take their property tax with them up to 3 times in their life. Now, yes, we got rid of the generational passing down of property tax, but that's a whole nother issue. Tax portability, I believe, will create more opportunities. So we will see higher number of offers going forward in 2021, especially starting on about March the 1st, because on March 1st, you could market it for a week, then you could have a 4-week escrow, and you'd be after the April 1st recordation date. Here's the frequency of overbidding. This is how frequently sellers are getting more than their asking price. And you can see we had a little dip down, and I was actually going to start looking into this, making sure it's not my data. I don't think so, because it's down here, down here, but then back up. But I just want to go explore this, because I don't have an explanation why in basically week 48, we had such a low overbid frequency. It isn't that low. Frankly, you're at 655%, but when you were running at 60% and going back up to 60% to drop down to 50% for a short period of time puzzles me, especially on closings, because closings get dispersed because they're of different lengths. And so there had to have been something pretty marked in the marketplace here, and I'm not aware of it. So could just be a complete data fluctuation. It could be an error. It's something I want to explore. I'll do that offline, because obviously it's going to take quite a bit of research. This is looking at the overbid frequency of each one of the micro market areas. When you look at this, it's basically flat. Yes, the red line here, Santa Clara County single family homes, has gone from say 60% up to something like 70%. So, this is only one micro market area. It's a large micro market area. 7 out of 10 single family sellers are getting more than their asking price. This is the overbidding. It's Santa Clara County, San Mateo County, single family, condos and townhouses, and it's 1 week of data. So this dip that I'm talking about is for 1 week, not for 5 weeks. So again, it's still unusual, but it's more likely to be a statistical fluctuation, because it's simply what closed that 1 week. It's not what closed the past week plus 4 historical. It's just 1 week. But I still maintain that dropping from 60% to 55% is a significant drop in the frequency of overbidding in a week. You can see, there are some fluctuations, but it's just a little steeper, and there's not a holiday associated with it 30 days earlier. I was trying to think Thanksgiving, but it's not been quite 30 days from the dip. If I'm talking about the middle of December, it's too long from 30 days to get back to Halloween. So I'm talking about something in the middle of, the first week or so of November, and there's just nothing unusual. The election. This year alone was probably the election. So this was probably an election dip. It didn't occur to me.
Yes, yeah, I think so too.
All right. Yeah, that is probably what it is, because the timing is right. See what happens when you think about things for a while? So here you have each one of the micro areas. They're fairly flat. That's the overall trend. We should be able to see dates down here. So now here's, pretty close to the election. So 5 weeks later, and I'm still, maybe there is a little bit of a loop down on some of these. But, I think the election is probably the best explanation. And then this would also be the election on the magnitude of overbidding. And so it's what happened the week leading in, probably the weekend before the election. Buyers and sellers were focused on the election and, not doing real estate's an optional event. So they're not doing the optional things. So they're ignoring real estate. They're paying attention to all the stuff on the news, paying attention to the voting, actually voting, although it doesn't take that long time wise. And so I think this is the little dip in the overbidding magnitude. And again, this is the macro data, 1 week only. This is all your different micro market areas. And if you look at Santa Clara County, and this line here would be single family homes in Santa Clara counties, we've gone from about 102.5% up to a number here that I would probably call 104%. So that's a fairly significant increase in the magnitude of overbidding. And it's getting to be one of the higher areas. So again, this plays into what I'm talking about, where single family homes in Santa Clara County are probably the most desirable sub area out of the micro market, out of the macro market that we're talking about. Now we're changing the concept a little bit as we're talking about overbidding. And the reason we're talking about overbidding so much is it's a pretty good indicator, because if a buyer's not feeling pressure, he's going to go in and offer the seller the asking price. The only reason he's going to pay more than the asking price is if he or she, the buyer and the buyer's agent guidance to that team, believe that they have to go over the asking price in order to secure their property that they want to get. So on this line, you have the best month ever, which was April of 2018. Then you have the best December ever, which was December of 2017. And then you come down here to the worst, and it's like, wow, there's only one line. Why? Because the worst month happened to be December of 2001. So if your worst month ever is a December, then your worst December is going to be that same month. So there's actually two lines on top of here, which is why it's almost a solid line. It's still broken, but it's not as broken as much of these two, because it's basically like two of these lines combined. But now what we're doing is we're looking at the distribution of the sale price list price ratio of every transaction that happened just in 1 week. So the last week is the red line. So what I would pull away from this red line concept is we are not the absolute top, but we are one of the best lines out of this group. And also, if you start looking, see how these are dotted lines? These are the older lines. These are the lines back in September and August. Then come the dashed lines, and then come the solid lines. So basically what this is telling me, and it's not a huge progress, but basically the market's been going this direction, going from the dotted lines up to the solid direction. Or you could say that it's been going vertically straight up, which probably makes more sense instead of an angle. But when it's going vertically straight up, the market's improving. And for the market to be improving going into December is actually pretty unusual. And my crystal ball, based on past experiences, when that happens, that means the first part of next year, 2021, is a very strong year. And it's going to be actually interesting, because some people may actually wait until they get to March 1st for that Prop 19 to take effect. So we may actually have sellers holding off and buyers wanting to buy, and we may really see a huge price increase. Time will tell. This is the same data, but just for the more recent weeks. I only go back to October 9th here. The concept is the same. The solid lines are the most recent ones. The dashed lines are the next most recent, and the dotted lines are the oldest. When you're looking at here, the red line is coming up sort of up here, and then here it sort of drops down to the bottom, and over here it drops off to the bottom. What's that telling me? It's telling me that we are really slowing down, but buyers were getting far enough away from shelter in place that buyers on the high end are now getting less restrictive when they're overbidding. What I maintain is anytime we have an insult, whether it be economic, outside to the marketplace, where it's scares people are uncertain, the buyers are not willing to be up in this range. They're not willing to pay 15%, 10% over asking price. They're as comfortable paying, but much lower numbers. So the line drops down vertically. But now here, when you get close, you can see the line isn't performing so well, and when you're below, it's underperforming. So what it's really saying is buyers are willing to go in and be aggressive on the low side when a property hasn't been selling. So potentially in the Atherton Menlo Park area, in a property for whatever reason that hasn't sold. If it hasn't sold, the market is really telling everybody, hey, something is wrong. It could be simply the price, it could be condition, and frankly, it's the combination of price, condition, and location. So, that metric is is saying it's not going to sell, so let's go in and test them and see how low we can get it. So the buyers are willing to test the low end of the marketplace, which is why this is on the low end, and they're also willing now to test the high end, and the middle part of the market is basically dead center. So now we're looking at this week's of data, and I've changed it. I am doing December. So I'm going from December 1st to the present day in December, and I will do that through the 5th of the month or the 4th of the month for December. My months are not calendar months. They start on the 1st of the month and they go through for 35 days. And that's to get rid of a lot of the weekly cycle that we have in real estate. So here I'm comparing the December 1 to present day, through the 25th. I'm comparing that to all the past years, not through the 25th, but through January the 4th. So the duration of these old lines are all 35 days. This red line will get to 35 days basically next week. It'll be close anyway. And you can see what it's basically telling you is this December is somewhere around the fourth best December we've ever had as far as the amount of overbidding. And that's pretty significant. And that's true on the top end and on the bottom end. So you can see that we're not having that disproportionate disconnect when we're talking about different periods of time in the year. And yes, they're only 1 week's going back. Now you're comparing essentially the same week going back in time, and you can see we're performing pretty normally, and we're about the fourth best year would be the way I would read it. This is the same graph, just in the most recent 12 years instead of 24 years. And here you can clearly see there's 2 plus 1, so this would be the fourth best year. Here you could almost start arguing that it's tied for second place. There's a three-way tie for second place. And, if someone wanted to argue through here that there's a three-way tie for second place, I wouldn't argue. Is there really a difference between this line, that level on my vertical scale? Not really. Here they're essentially equal. The other thing, since I'm spending a little bit of time on overbidding, I do want to disclose most of my data is through midnight last night. Overbidding cuts off at basically 9 o'clock because doing the overbidding does take a fair amount of time, and that allows me time to go through and correct. In fact, I found 3 typo errors today in reviewing. So this is as of 9 o'clock. And just to give it perspective, out of about 250 data points that I should have done, I missed 4. 4 data points on 250 on this line, we're not going to see it. So I'm just disclosing that for being crystal clear and transparent. Now I'm changing topics a little bit. I am looking at what I considered earlier as being the hottest micro market area, which is Santa Clara County, single family homes, December's overbidding. And again, this is that formula for I'm starting at the first of the month and going to present day, and everything else out here is for my 35-week cycle. But when you look at this line, this is the second best December we've ever had. So instead of being the fourth best for the micro market or tied for second, this is in second place, and it's ahead of second place by quite a bit. I will point out up here, it starts getting tied, and this is because this year, even though I was talking about buyers are getting less hesitant, less restrictive on their overbidding, they're still more restrictive than they typically are for December, because we typically don't have a shelter in place starting in February and continuing. And this was one of the typos that I caught and was able to somewhat correct. For some reason, it got left off, so I was able to put in 2020 there so people can understand. And same with this graph. And again, here's just the same thing for the last 10 years. You can really start seeing how we've pulled away. If you're talking about single family homes in Santa Clara County, it's having the best marketplace we've ever had other than 2017. And as you know, I firmly believe from basically August of 2017 through April, maybe May of 2018, we were just having the most phenomenally unbelievable year we ever had. And it was only 9 months, but we're not going to have that before. So I really believe this is an outlier. So in a lot of ways, I don't feel totally uncomfortable with the disclosure that this is basically the best December that we could expect to have. Here is a graph going back to sale price. The color coding is based on the median, which is the middle number here. The first number is the 10 percentile. The middle one is the 50 percentile, which is the definition of median. And the top one is the 90 percentile. So what you can do is look on this map and say, what is the bluest area The bluest area is the one with the lowest price, and it's pretty tied between San Mateo County up here in the north, San Mateo County, and Central and South San Jose over here. So you just come up here and we'll use South San Jose as an example. Your 10 percentile price is 730,000. Your median price is 890,000, and your 90th percentile price is $1.3 million. So it's color coded based on the median, but I have the other ones on there for references. So basically what you know is 80% of the homes in this micro market area are basically between $750,000 and $1.3 million. So that gives you a rough idea. And again, the color code's over here. I'm trying to get the color code over here in front. I may not be able to accomplish that, but here is the actual data. So you can come back and look at any data point that is of particular interest to you. That's Santa Clara County single family. This is San Mateo County single family. And this is both counties, condos and townhouses. And with that, I want to point out that our next week's meeting, to get here, you have to put in 2021 instead of 2020, since we're into a new year. The handout for this slide has been reduced to 44, and I think that will be pretty stagnant going forward. They are posted and they should be available for everyone to get. And with that, I'll open it up to comments and questions. Not seeing anyone unmute themselves. I do want to share a little interesting tidbit that was shared with me. A media story was quoting the median sale price in Santa Clara County at 1.57 million, and it was from CoreLogic, DataQuick, and that stunned me. I didn't know where the number came from, but CoreLogic, DataQuick's a good source, and they were saying it was Santa Clara County single-family homes. You go to the Mercury News that is quoting CoreLogic single-family homes in Santa Clara County, and they're saying the number's 1.1 or 1.150 or something of that number. I don't remember. It was like a 400,000 plus gap between what should be the same number from the same data source. So what that tells
1.18 million.
1.1, that tells me that you have to pay attention to the details, and the media tends to gloss over the details, and we don't know what they were actually using. And that's what's good about having a single source of your information, is because whatever their assumptions they're using, whatever they're using is consistent. So when you're using the Mercury News story, you can follow that from week to week or month to month and get a trend. When you're using the other number, even though when you first look at it, the number is crazy because it's off by almost $500,000, you can follow that trend too, but you cannot jump from one media source to the other without knowing the details, and the media normally does not get into the details.
Okay, good.
Not advancing. So now we're going to hit 11 different metrics, and we're going to have 5 slides in each one. We're only going to talk about one. So as you know, the 3 major metrics to me are days of unsold inventory, because that tells you this supply-demand balance. Then there's 2 on overbidding. One is the frequency of overbidding, and the other one is the magnitude of overbidding. Those 3 metrics, and this is the most important of the 3, tell you what the market's doing. And again, as days of unsold inventory are decreasing, the market's accelerating. So here's Santa Clara County. It's the fastest, and look at it dive off as we go into the new year. And basically what this is telling you, you have countywide, you have 20 days of unsold inventory. That's fast. I mean, if we went anywhere in the country and told them we would sell every house in the marketplace in 2 months, they'd go, wow, you have a fast marketplace. If we told them we were doing it in a month, they'd say, I don't think you're right. Now we're saying we're doing it in under 3 weeks. Even the California Association of Realtors talks about months of unsold inventory, and they're usually like 2 and 3 months of unsold inventory. I quote days because I think it's a lot easier to talk about whole numbers instead of fractions of days, but we're talking about under 3 weeks. We're talking 20 days. I don't think people understand on how fast that is. You just go to single Santa Clara County condo townhouses, it's twice as long as 40 days. And San Mateo County single family homes is somewhere around, I would guess, about 26 days. Now we're looking at the frequency of overbidding. Again, in agreement with the previous slide, the amount of overbidding, the frequency of overbidding is going up in Santa Clara County. If you want to call that level, that's fine. I'm coming back here and sort of seeing an uptrend. We go to San Mateo County, and recently it's clearly coming on a downtrend, and the condo townhouses are completely flat. So I think what's happening in San Mateo County is what I've said from the almost the beginning of this stuff is there seems to be a lack of premium for short commutes, convenient commute. And that's what San Mateo County was all about. And so San Mateo County is getting hit hard. There's also a preference now for single family homes for more privacy and larger single family homes. So the condo townhouse market is getting hit. So that's why this marketplace is the lowest on the frequency of overbidding. It's only at what's that, 50%, and that's just something right there where I'm sitting there and saying only 50%. Well, most areas would be happy if half the sellers were getting 50%, but it's only 50% when you're comparing it to almost 70% here. Moving on to the overbidding magnitude. Again, you can see Santa Clara County single family homes is continuing to go up. We're at somewhere around 104%, or at least approaching it, probably more like 103 and 103.7 would probably be more accurate. San Mateo County is coming down. It's under 103%. It's probably about 2.7%. And coming down to the condo market in Santa Clara County, you're only at 101%. So you can see how there's consistency between these different metrics. This is something that people are more able to understand. This is median days on market. How long is a typical home been on the market in place? And you can see Santa Clara County here, we're at 10 days. So to be at the slow time of the year that a lot of people perceive, and for half the homes to sell within 10 days, that is pretty incredible. And keep in mind that a lot of listings are artificially held on the market for basically a week plus or minus a few days, just to give it the exposure you need to make sure you're getting close to market value. That's basically what it's saying. It's saying the homes are selling as quick as people will do it. San Mateo County is a little slower and clearly going up here. I mean, so here's 10 days. This is going to be 11. Here's 12. Here's 13. Here's 14. And that's a pretty steep climb to be going up like that. And then look at the condos in Santa Clara County. It's people are realizing, wow, the market may be fast, but the condo market isn't. We don't need to go in there rapidly, and the market's slowing down. Here's the current available inventory, and you can see that every one of the areas are going down, but it goes down at this time of the year. It's the holidays. Sellers don't want their house on the marketplace and people tramping through it. Here's the number of offers. The number of offers are going down, but the fact that the number of offers going down is not a problem. You have to look at it in relationship to the inventory. Then the number of closed sales, that's still flat. It's going to start dropping down, and this may be the start of it right here on the very right-hand axis, because the closings are delayed from the sales, the offer activity, by basically 30 days. Here's the 10 percentile price of each one of the different micro market areas. You basically can see it's flat, and when I say flat, it really isn't flat. It's just almost an optical illusion, because if you go back here to the beginning part of the year, the red line looks like it was right about there, and I might call that $800,000. We come out over here, and that's almost 900. I think it was 890,000. If you have a $90,000 increase on a $800,000 basis, that's over 11% appreciation. So I'm saying flat, and I'm a little biased because, frankly, I was expecting the prices to go down with shelter in place, and that clearly is not what's happening. Here's the metrics for the three big ones to easily see. And again, I'm going to call them flat, but they're probably increasing, especially if you go back all the way to the beginning part of the year. Here is the median price. This is what most people follow. This is just the midpoint of the marketplace. Same comment, basically flat. You can look at them. And, 10%. When you're talking about 10% appreciation, I really shouldn't be calling it flat, but it's not spiking up. This would be a spike up if I was seeing something like that. This would be a spike down. These are pretty flat. That's how I'm using the term flat. Same observations I met. The first slide on those three just show you the different micro market areas. And then here's the 90, and here's the county data. There's more fluctuation on the 90 because the prices bounce around a little more at the high end. Here's your duration of escrow, pretty pointless, right at 30 days now. Now we're getting into days of unsold inventory, and this is just going back in time. So this is 5 weeks ago, 4 weeks ago, 3 weeks ago, 2 weeks ago, and now I was off by a week somewhere. Oh, this would be 1 week ago, because I need to start saying 4 weeks ago. It was 29 days ago, 22 days ago, 15 days ago, 8 days ago, and 1 day ago. And the concept is the same. It's just to let you see the change over time. I'm trying to stabilize the map, and basically from last week to this week, you can see how if I alternate between those two, you can see the color change. That's what I was hoping to do, and I think I'm finally getting there. So that's what we'll hopefully see going forward. And with that, I have about 90 seconds to take questions from anybody. Handouts are here. Next week, we're at 2021. Any questions in the last 90 seconds of time that I have? Not seeing anyone, I'll call it a end and hope everyone enjoying the holiday week and see you next week.
Yeah, see you next year.
Yep, it will be next year when we meet again. Take care,
Right.
everybody.
Thank you.
You're welcome.